Hey folks, it's Vic Noble here with your weekly trade example for the week ending May the 3rd of 2013. This week I thought I'd show you an example of the kind of things that we teach in the recurring Forex patterns course, just because I've had a lot of inquiries about it, and it's just been such a popular training program. But most importantly, we're seeing so many people getting just great results with the trade. So, hopefully this video will give you an idea of how it is that we read price action and figure out levels and patterns to trade off of. There's actually in 6 patterns that we show in the course. We've just numbered them 1 through 6, but the reality is that it's very common for the patterns to overlap. So in other words, we might have a pattern 6 that's also a pattern 5, or even several other patterns all happening at the same time. And these patterns set up every single day, lots of them. So the one I'm going to show you is one that one of our Coaches Corner members sent in. It was Mike, and it was on the US CAD pair on May the 1st. This is a daily chart right here, and I think it's pretty clear that price came down to this was right here when you took this trade in here, and really clear that you can see if you look across, this was a pretty good level of support and resistance, and all the way across. Look at this level here, resistance, and then it came down and retested again here, and like I say, a good level of expected support. I keep these lines on here so that I know in advance where I can expect there to be a possible reaction, a support or resistance level. So if one of these levels is hit, then I can look for a recognizable pattern on smaller time frames together with other factors that will determine whether or not I'll take a trade. If we go down to the 1-hour chart here, what you're seeing here, here's this good level of support that we saw on the daily chart, right? So it puts you on alert to watch for a trade setup. In this case, it set up a few things. First of all, there was MACD positive divergence. That's one of our patterns. So price is going down, MACD's going up. See that? And it was qualified the way that we like to see it. It was also our pattern number 6 when it started to move up like this, which is a momentum trade. And as I've said before, we look to see if there's also a slingshot or a moth setting up to confirm it. Because this really adds strength to the setup, and it was a perfect 1-hour moth right down here. That's something that's taught in the Coaches Corner, by the way. So there were lots of things going for this trade, and Mike got in right down in here, and he just had a 10-pip risk in it. Now listen, this is what's important here. He used a solid, recognizable pattern, well, actually several patterns all at once, setting up, together with a great analysis of knowing where to expect a key reaction level, and he got in, and this is really important, with extremely low risk. The big advantage of this is that you can get a very high reward to risk, because for example, if you get in with 10 pip risk, price only needs to move 20 pips in your favor, and you've got a 2-to-1 reward to risk, right? So you can see it doesn't take a lot. So Mike elected to try to, what he wanted to do is hold this for a bigger profit target. That's the way he was looking at it. And so he got partial profit right up in here as it went up in his favor. And then it just went sideways. And so he also reduced, and then he eliminated risk on the other part of his position so that no matter what, he was protected and he would profit from the trade. And that's exactly the right thing to do. Because the deal is here, you don't know what's going to happen. You might think you do, but the fact is anything can happen. Don't ever forget that. Anything can happen. And unfortunately, see this part down in here, the price action? Price came back and touched his stop during a news release, and then it went up. Well, that's trading. Now you can look back at this and you can say, well, he should have kept his stop a little bit further away or taken all this profit up here. Hey, that's all total hindsight. Okay, you have to make assessments and protect profits while you're in the trade in real time. There is a process involved in trading profitably, and some principles that you need to follow. And what Mike did was just right, and it'll serve him well going into the future. I'll tell you that. So, I hope that helps. I could have shown you lots and lots of very profitable trades from this week with reward to risks of over 3-to-1. But to me, you know what? It's more important to see how things evolve in the real world. Here's a guy that took a real trade, and what I mean is that trades don't always make it to our targets, right? So we need to do a very effective job of managing them as they move along, and I think Mike did a great job of this. Okay, so I hope that helps in seeing how you might want to analyze a chart using the higher time frames for key levels and then use lower time frames for actual trades. Thanks so much. Enjoy your weekend, and I'll see you at the end of next week with another weekly trade example. Take care.